Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, March 12th, 5:14 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through days way back in the beginning of November. You can see the trend gauge over here in the upper right of the screen. All four green arrows there. That's what we want to see. We took away the yellow sub arrow on leadership as leaders have bounced back nicely over the last couple of days since that negative reversal in the market on Friday. And all five of the major indexes are trending above the three time frames that we track for asset exposure. That's the short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average. So what happened today? Before the open, CPI inflation data came in hotter than expected. Now that would normally throw cold water on any rally, and it did for about 10 minutes pre-market, and then we started to rally. Gapped up at the open, 0.45 on the S&P, 0.6 on the NASDAQ, promptly sold off. Everybody was thinking that there's no way we can go higher, right? Especially after that negative reversal. No, bulls completely shook it off, closed near the highs of the day, and an all-time high close for the S&P 500, led by big tech. Here are the numbers on the day. Big seven up a massive 2.54%. NVIDIA shakeout last week, bounced back over 7% today. RG8, this is our 8 growth ETF composite, up 0.73, led by FFTY. This is the IBD 50, loaded with leading stocks, up over 3%. NASDAQ or S&P 500 up 1.12%. Equal weight not there today. Breadth was weak with small caps being down, and equal weighted lagged the market cap weighted S&P 500. NASDAQ 100 up 1.43%. Equal weighted, nice return, but still half of the market cap weighted NASDAQ 100. Dow up 0.6, mid caps up 0.5. Russell 2000 small caps lagged all day with yields higher today on the CPI report, just barely negative. Global 60/40 up 0.53%. This was mostly stocks as bond prices were down because yields did tick up. In-house GROTECTION up 1.10%. Got a new public service announcement here. This is something that talking to a couple of new prospective clients, and they're asking, and everybody asks really, how is Revere different from the traditional advisor? And we couldn't be more different. Start with, let's take a look at these 8 different characteristics here. First, our investment approach, trend following. What makes sense? The trend is up, you go with it. The trend is down, you keep your capital dry. Not traditional advisors, they're pie chart, asset allocation, think long term. We don't care if something's lagging. At some point, it'll outperform. All in all the time, blah, blah, blah. They're more babysitters than they are technicians. Direct access to the portfolio manager. Hey, that's me. It's also Ted and Connor and Dan. We make the investment decisions. You get direct access to us, these big pie chart advisors. Get something from a recommended list if you're lucky. Otherwise, it's just in ETFs or mutual funds under an asset allocation model. Active risk management. This is what keeps us out of trouble. We detail it every night here on these videos. Technical analysis of the markets. You see us doing that. Focus on leading stocks, just following the time-tested rules of William O'Neill on how to make money in stocks. Avoid lagging sectors, no diversification. That means we don't buy bonds, or we don't buy emerging markets or international stocks, or even US stocks if they're lagging. There's no point being in something that's in a downtrend. We explain it all here in these nightly market insight videos, including all of our portfolio changes. We can even give you down to a decimal point what the downside risk is going to be in the portfolio if all of our stops were taken out. We call that Revere Estimated Balance at Risk, or REBAR. I know a lot of people are traders out there, and they like some of the things that we talk about as far as portfolio management. But if you got friends or family that are stuck with traditional advisors that don't protect their downside, send us our way. We'd be glad to explain what we do here at Revere. And now let's get into everybody's favorite time, the charts. You can see the S&P 500 here with the big negative reversal on Friday, lower low on Monday, but bouncing back to close in the upper part of the range. Favorable reaction to CPI. Let's break it down on a 15-minute chart here. Come on now. Break it down on a 15-minute. Don't make me look bad, Market Smith or Market Surge. All right, looks like charts are down. Okay, they're back. Let's go. S&P 500, 15-minute chart. Here we go. So here's the false breakout on Friday morning. Harsh sell-off afterwards and into the close. Gap down Monday, but crawling back. Gap up. Got to try to shake everybody out early. Didn't do it though. Then a big rally up, pull back, a strong close. Not a new all-time high, but a new all-time high close. And this 50-90 area, see support there. That's from yesterday morning's lows. It was also from last Wednesday's lows. Below that, as long as we stay above this 50-50 to 50-60 level, everything's going to be all right. So there's the S&P 500. Let's go to the NASDAQ 100. Not making new all-time highs. That's because we've been lagging slightly on a relative basis here, but not today, up 1.43%. Dow Jones Industrial Average breaking above the 21-day moving average after undercutting and reclaiming it yesterday. Can you hear my dog saying hello to you? Here's mid caps. The second day bouncing off the 8-day moving average up 0.5%, and now the laggard on the day, the small cap, down, closing in the upper third of their range, but below the 8-day exponential moving average, but still holding above the green line, the 21-day moving average. Let's go to the VIX. Market up big today. VIX down big today, down 9.1%, breaking back below that 15 level, below the 200-day moving average, below the 21-day moving average, still above the 50-day moving average. Good response from the VIX. You like to see it when it confirms what's going on in the overall market. US dollar up today, but toward the lows of the day. It's bouncing after being extended. And this did take a toll for the first time in a while. Gold stocks and silver down today. You can see gold down 1.1%, certainly deserves to take a break and at least touch the 8-day exponential moving average. GDX down 1.83%, bounced at the 200-day. On this pullback, we took a starter position in Nugget, which is 2 times the GDX. SLV, silver also down 1.16%. Bitcoin had a negative reversal, but rallied toward the later part of the day, still down 1% on the day, continues to ride this 8-day exponential moving average higher. On to bonds. With the hot CPI report, bond yields up, bond prices slightly down, but a normal pullback since they have been rallying over the last week and a half. There's the broad bond index. Here's TLT, the long bond, down 0.84%, which means you're going to see the 30-year yield up 0.82% into the declining 21-day moving average and the 10-year TNX. The 10-year TNX up 1.24%. All right, that's our inter-asset correlation. Let's get to the tail of the tape. You can pause this. I'll hit the highlight. So CPI, 3 out of the 4 key measurements missed. And despite it, the futures initially sold off, but then popped. Yields were up a bit today, as I mentioned. Day count back to up 1. 5th day above the 8-day exponential moving average, 44th day above the 21-day moving average, including 87 out of 88. Everybody's saying we got to pull back. But honestly, they've been saying that for weeks, months, and this is what bull markets do. They confound you to the upside. as opposed to bear markets, which can confound you to the downside. But we make hay while the sun's shining, and it certainly is for the bulls right now. From a sector perspective, strong today, tech, software, semiconductors, and home builders as well, despite the rise in rates. Completely ignoring what's going on there. On the downside, oils, gold, and silver stocks, regional banks, solar, utilities, and real estate. We want to take a look at the Oracle chart as this kind of jump-started tech on its after-hour earnings report last night. Portfolio, as I said, the only change today, adding nugget to the portfolio and the bottom line on the day. CPI hot, but big tech shakes it off and leads the S&P to all-time high close. Small caps lagged on the day. Let's take a look at some charts, and we'll start off with Oracle. And this is the second big tech name that hasn't really done much for a while. Still, you see consistent earnings, but not the growth. But you keep gapping up like this on earnings and saying that it's due to AI and that you're investing in infrastructure, and this is what your stock gets greeted with on 500% above average volume, up 12% on the day. Recall IBM, its last earnings report, talking about how AI is impacting its business for the better. Still making money, not big growth rates, but if they can continue to, if they can deliver on some of the things that they're talking about, you can see IBM forming a nice flat base and trying to break out here. So those are two big tech names from days long gone by, really making an impact there. Let's go to the portfolio. Here's NVIDIA. You can see after the undercut and close on the 8 yesterday, nice rally off that 8 yesterday, up 7.2%. Saw a stat that NVIDIA CEO said that for every dollar spent on NVIDIA chips, there's $11 to $12 going into general infrastructure to support to support AI. And that's an amazing stat. And that also supports why you see all the peripherals tied to data centers that are also participating in this run higher. AMD undercut yesterday's low, closed back above the 8-day exponential moving average, up 2% on the day. Lilly, only 1 day below the 21 is all it can get, up 2.8% on the day, back above the 21 where we like to see it. CrowdStrike, after the big reversal, the 21-day is acting as tremendous support 3 out of the last 4 days. So it's clear line in the sand there for getting into crowd, up 3.8% on the day. Uber, just in line with the market, tight range, volume really drying up here, up 1.1% on the day, holding the 21-day. Not everything was perfect today, as Palantir, this thing trades 77 million shares a day. And with everything AI related up today, it was down 2.56%. We know how it acts, so our position size is on the small side. Just don't like to see action like that. Like to see everything rowing in the right direction, but not bad enough to trigger a stop. And same thing on Dell. Data centers acting great. Dell continues to see some selling and unable to regain that high volume close on its gap up on earnings report. Holding on to the 8-day exponential moving average for now, and holding on by a thread to our portfolio, to a spot in our portfolio. Another laggard in the portfolio coming back a bit, back above the 8-day exponential moving average, Ralph Lauren. Maybe the 2 weeks was about all we needed to correct after the nice run after earnings. And Nutanix had been going a bit sideways, still going sideways, but reclaiming the 8-day exponential moving average today. That's going to wrap it. As always, like to hear from you. Oh, one more. Coin announced a convertible offering after hours. It's down 3%, bounced back, pulled back in, found support near the 8-day exponential moving average today. As always, love to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Remember GROTECTION, dual purpose, protect assets, during downtrends, grow assets during uptrends. What other factor of your life when things are going wrong do you not take corrective action? Why should your investments be any different? Because Wall Street has sold you a bill of goods that you got to stay in the market all the time because they can't collect fees in their funds and ETFs if you're not in them. We disagree strongly. We have proven that there's a time to be in the market and time to be out of the market. And with that, I'll wrap up the video for Tuesday, March 12th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.